I'm Andrew Jordan, CPA, and welcome to Tax TikTok Advice, a limited series where I take the flashy, click-worthy tax strategies that you see online and I put them under the microscope. Let me start with a disclaimer. This is not tax or legal advice. Everyone's situation is different, so please consult your own professional. And if you're watching this and I am your professional, I'd be happy to schedule a consult to talk about your specific situation. Now, let me be blunt up front. My most successful clients, they're not chasing tiny tax savings that add friction to their business. They're too busy building wealth, growing their companies, and living their lives. Staying focused on running a great business beats contorting yourself into some secret loophole every time. And here's another truth. If you're going to commit tax fraud, first of all, I won't work with you, but honestly, you shouldn't bother jumping through a bunch of hoops first. Fraud is fraud. Dressing it up with fake retreats or sham deductions doesn't make it any better. So why does this series exist? Because tax TikTok, and I don't literally mean TikTok, I mean the style, is everywhere. You've seen it, short videos that promise secret strategies, effortless loopholes, or tricks your CPA doesn't want you to know about. They're designed to hook you fast and make tax planning look easy. The problem, they usually leave out a lot of fine print. Take the Augusta rule, which we'll cover in the next video. Online, it's pitched as automatic, free deductions. The reality, yes, it works in certain cases, but only if you follow strict IRS rules. If you don't, you risk losing the deduction and maybe facing penalties. And even if it works, the actual savings might be more modest than you expect. And sometimes the juice just isn't worth the squeeze. So it reminds me of the real estate hype. You've probably seen the pitch, buy an Airbnb. It's automatic, passive income. Sure, the spreadsheet looks amazing if everything goes perfectly in their example, but they don't show you the guest who trashes your property, the midnight cleanup, or the unexpected cost. Tax TikTok is the same, a sales pitch, flashy on the surface, messy underneath. We've had clients come in with 10 or 15 different entities because someone sold them a complex strategy. They didn't save money, they created a compliance nightmare. In one case, the structure actually ended up costing each owner an extra $25,000 a year in taxes before we unwound it. Tax TikTok is appealing because it's designed to be appealing. It makes you feel like there are secrets out there, and if you only knew them, you'd unlock massive savings. The truth? Real tax planning is about your situation, your numbers, and weighing the actual benefits against the cost. That's what this series is about, cutting through the noise, showing you where strategies actually work and where they're just hype. I do want to be clear here. I'm a CPA who does a lot of proactive tax planning, which can be hugely powerful and save a lot of money. If you're paying a lot of tax and you aren't doing tax planning, you probably should be. But I mean tax planning with a real reputable CPA. So stick around. In the next episode, we'll dig into the Augusta rule, one of the most popular strategies you'll see online, and I'll show you where it makes sense and where it doesn't.